Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, April the 28th, and wanted to discuss what's really been going on in markets over the last week. We are getting quite a bit with 50% of the S&P 500 reporting corporate earnings. Want to discuss what we're seeing so far out of earnings and what we see in markets happening right now and where investors are and where we see markets moving forward. So last week was a tough week in the S&P 500 with the S&P 500 down 4.6% on the week. Rough week for the large cap index, which is the S&P 500. But interesting enough, the S&P 400, while down, was only down 1.2%, and the small caps, as measured by the S&P 600, were only down 90 basis points. Again, not as much international exposure on the small and mid cap companies as the large caps are exposed to internationally. So, and that's what's really driving markets. So we go into this week and we get quite a bit of earnings reports. We've gotten quite a bit of the big cap techs reporting this week, with Apple reporting this afternoon. But several have reported this week so far. And what we're seeing so far with 50% of the reports in is that revenue is beating by 11%, and earnings are beating on an average by 6%. So a couple things that tells us is, number one, business is still good. America is still strong. The business environment in America is still very good. The second thing it tells us is that while inflation is existing, companies still aren't fully passing on the higher costs of inflation onto the consumer yet. So you're seeing these companies with a 5% divergence between revenue growth and earnings growth, and that's telling you that they're eating some of that cost. So they still have the ability to raise costs on the consumer if margins continue to compact, and if inflation does not wane in the near term, that they do have pricing power and the ability to do that. So, but one of the things that we are seeing in the marketplace, and we've seen it so far year to date, we talked about it last week with the dispersions between growth and value, but what you're really seeing on the growth sector is you're really seeing a lot of selling by companies that have no earnings or very minimal earnings, or all have negative earnings, being sold off significantly hard this year, down anywhere from 30 to 60 to even 70% from their recent highs. This bucks the trend that's been going on for probably the past 12 years or so in the stock market. It was growth at any cost, growth, growth, growth. We're willing to pay price to sales multiples, not price to earnings multiples. And what we've learned is that the pandemic, for a lot of these growth companies, really pulled forward a lot of growth. And now they're starting to come back down to regular growth rates, or even slower growth rates, because they've already capitalized on the market that they were trying to penetrate, and they've already penetrated it and are now slowing down in their growth metrics. And so what investors are saying right now is the stocks that we want to be invested in and that we want to be a part of are stocks that return capital to shareholders, whether that's through stock buybacks or dividend payouts. We want to see positive cash flow, and we want to see earnings and earnings growth. Nothing exciting necessarily about some of these companies, but you're seeing a big shift in the consumer from goods that we saw for the last 18 months to 2 years that we've seen since the pandemic started, to other areas in our economy and in the service sector that have been underserved since the start of the pandemic. So as always, if you have questions about what's going on with your portfolio, or how do you handle this shift away from what has been leadership for the past 12 years, how to navigate through that, feel free to give us a call. We're easy to talk to. You can reach us at 904-346-3460, or as always, check us out online at www.riverplacecapital.com. I hope everybody has a wonderful rest of your week. Thanks so much.